Welcome to Gaming Fin, your channel for everything related to the gaming industry and the stock market. And today, guys, we're just talking about the stock market. Today, I'm not talking about a specific gaming stock. So, guys, I am a buyer in this market. So I am buying stocks in this market. And you are going to ask yourself, is Mr. Orange actually crazy? Is he crazy that he's buying stocks in a market that is so devastating? In a market that is just falling today? We can see it here on the right side. So just falling today 5.94% or 5.9%. So the Nasdaq is still open for 10 minutes. So just today, guys, just today, look at this. I mean, this looks terrible. This looks terrible. So yesterday we had this incredible, I don't know how to call it. Was it a short squeeze? Was it a counter bounce or something like this? So yesterday was an impressive day, but then today the market decided, no, that's not enough. That's not enough. We're going to completely devastate, and we are falling back to the May low. So the beginning of the beginning of May lows, and you see that's where we are now. So 5.86% down. So I would say what we are seeing in the Nasdaq or overall in the stock market now, it's just a sell-off. Yeah, it's a classical sell-off. It's a bear market. It's a crash. In specific stocks, it's a crash. I mean, a Tesla is 9.3% down, and Netflix is 8.4% down, and Apple is 6.58% down. So disclaimer, I'm not a financial advisor, I'm just a retail investor just like you. This is my opinion. This is for entertainment and educational purposes only, so don't buy any stocks, especially no stocks I'm talking about in this video. So US oil is actually up, and gold, even gold is down, silver is down, and Bitcoin is down. So everything is down. It's the all down market. Everything is down. So of course, guys, I could now just talk about how bad the mood is, that I'm terribly depressed, I'm losing thousands of euros, dollars every day. So yes, it's not a good feeling, guys. It's not a good feeling if you lose the money, but on the other hand, you just have to remember. So all right, so when the markets go down, actually it's good to buy when the markets go down. So when the markets go up, you shouldn't buy, you should sell. You should be a seller in this market here on the upwards trend. But you should be a buyer when it goes down. So I personally think we are not at the bottom yet, but I'm still buying. I'm still buying because I see some stocks, for example, if I'm now, for example, Netflix, let's click on this. So where is it here? Here we go. So I'm invested in Netflix, obviously. So if I look at this Netflix, yeah, we broke through. It looks terrible. I mean, look at this, where Netflix is at the moment. Netflix is at the moment somewhere where September 2017. You have to imagine this, how long time this is ago. This is like almost 5 years ago, and this is where Netflix is right now. And everything that has built up since September 2017 has been destroyed, like in half a year, in 6 months. Everything has been destroyed. So this is simply crazy. So, but I think that's a good moment to buy, because I mean, yeah, sure. Can we lose half of our money from here? Can we lose two-thirds of our money from here? Hey guys, we can still lose a lot of money, definitely. This is going to happen. Everything can happen. Look at Apple. I mean, everyone is hiding in Apple. Apple is, I'm also invested in Apple, but everyone is hiding in Apple stock and thinking like, yeah, the market is always, I mean, when the markets go down, everyone is going to buy Apple. It's true, but now just imagine Apple. So here we have to see on Finbris, this is Apple. You see how big Apple is. Biggest company than Google, Amazon, Microsoft, Tesla, and Facebook. Those and here, yeah, Berkshire Hathaway. So those are the biggest companies. And let's imagine Apple is actually falling to like $100 or $120. Oh my God, guys, this will completely devastate the markets. Is it going to happen? I cannot tell you. I mean, I don't have a crystal ball. If I have a crystal ball, I wouldn't make YouTube videos, and I would probably sit somewhere. Or I would make YouTube videos, but I would make them somewhere from a beach in the Caribbean. So drinking not beer, but drinking only nice, good cocktails and looking at the seaside. So no, just kidding. So I like what I'm doing. So I like making those videos. But guys, look, it's the everything is possible market. Everything is possible market. And if you look, for example, at the S&P 500, I mean, from the top, the S&P 500 doesn't look so bad. So we were in the top like 4,800 and now we're at 4,100. So it doesn't look so bad. Can it fall to 4,000? Can it fall under the 4,000? Totally, this can happen. I mean, we have extreme volatility moves in every direction of the markets. And now look at this, guy. Look, here, that's the pandemic low. I mean, we were dropping, the S&P 500 was dropping from 3,400 in the pandemic lows to 2,200, 2,300, let's put it like this. So also massive drop back in the days. And then, okay, I understand then very quickly it was really, really going up nicely. And a lot of stocks that I have now that are still up a lot from 2020. Yeah, they're up because I bought them around about here. I bought them when the market was falling. And this is my strategy. So if I buy stocks now, then I bought them when they were falling here. I bought them when the S&P 500 was falling to 3,800 points. I was buying when it was falling to 3,400 points. So I was always buying stocks when the market is falling. And then the market will come back, even with the Fed rate hikes. Fed rate hikes, yes, they are true, and they have an impact on the liquidity of the overall economy. I mean, they're fighting inflation, and therefore that's the goal, to also in the end, of course, to limit the liquidity. But it will not uphold like this forever, and the market will come back. I mean, over the all, look guys, so that's from 1977. So yeah, up to the dot-com bubble, bam, down, losing 50%. Going up to 2007-8, again losing like over half. And since then it was going massively up. And could we lose now again half of it, of 4,500? Yeah, could we fall now again to 2,500? Oh my god, yes we could. So if this happens, yes, I indeed have lost a lot of money because I'm a long-term investor. I'm not trading, so I'm not selling right now. But yes, then I'm just continuing to add it to my positions. And this is what I always say, or would I always, I mean, I don't recommend you anything. And in a market like this, you should listen to your gut feeling. So if you tell yourself now, so I'm too worried, I want to wait until we really go down a lot. So, and until then, just do other things, just earn money, gain money, do work on your skills, make more money. So maybe that's more important. And then maybe if you then still interested in the stock market, if it falls now, let's say for example to 10,000 points, the Nasdaq would fall. Are you interested then in the stock market again? Are you not just completely devastated that the money that you still have in the stock market is, or that you lost a lot? So are you going to buy then at one point? So that's a good question. So therefore I'm buying now, because if I would not buy now, I would completely run against my own mindset. So I always say don't invest everything, be extremely diversified. But on the other hand, yeah, this is how diversification then looks in the overall market. In an overall market crash or market decline, this is how how diversification looks. It looks terrible. It's terrible. I mean, you have an Amazon with almost 8%, Google 5%, Apple 6%, Microsoft 5%. So it doesn't matter where you invested. Maybe if you were invested in Becton Dickinson and Company, you were up to date. If you were invested in Booking Holdings, you were up to date. If you invested in Kellogg Company, you were up to date. If you invested in Centini Corporation, you were up to date. In Twitter, yes, you were up to date. Guys, it's just hard. It hurts. And if it hurts too much, then you have too much money in it. And if you have too much money in it, I'm not saying don't take money out, but don't invest in more money. So be an investor for the long term. Be an investor for the long term. Don't get yourself in a bad mood. If you get in a bad mood, don't worry. Every investor gets obviously more in a bad mood. Every long-term investor, no one likes losing money. But on the other hand, guys, we will see good times again. We will see very good times again. And the good times, they will definitely compensate us for all this pain we have now, because it's painful, but the better times will come. So thank you very much, guys, for watching. See you next time. Bye bye.